All eyes on today's Fed meeting, which is going to take place very shortly at 2:30 p.m. Eastern Time Zone. Powell's potential rate cut is going to be what is the suspense across the world among the central banks and also the think tank of various economic experts and financial experts world over. Jerome Powell, the head of the Fed, will talk at, of course, 2:30 p.m. ET. But how much is going to be the cut is what the speculation going around. Of course, when we compare USA this time in terms of reducing the interest rates, it's trailing a large group of its counterparts in the Eurozone. Canada, Mexico, Switzerland, and Sweden, all of whom have already lowered interest rates. As expected, the US Federal Reserve will lower interest rates for the first time since the COVID 19 outbreak began, and investors around the world are nevertheless prepared for the effects. A little reduction in the Federal Reserve's rate might depress markets and fuel worries that decision makers are out of touch. By year end, the markets have nearly entirely priced in a 100 basis point reduction with a 59% probability of 125 basis points. But the most important thing is what's the worldwide influence going to be of the Fed rate cut? The pressure that the interest rate difference places on currencies is a major cause of concern. In general, higher rates draw more international investors who are looking for larger returns, which raises the USD's value. In the event that interest rates are lowered, it will be the opposite or the vice versa. The current cycle has demonstrated this with the Turkish lira and Japanese yen suffering while their central banks maintain low interest rates, and the US dollar rising throughout 2022 as the Fed implemented strict rate hikes. The US dollar is measured against a basket of currencies. In addition to its impact on foreign exchange, the Federal Reserve's rate setting also has a significant effect on the US economy, especially in the light of the recent attention paid to the labor market's decline and the potential for a recession. This is a major contributor to global growth. Thus, it will undoubtedly have an impact on asset values globally. This includes gold, which this week reached a record high due to predictions of a Fed move. Although historically this has not always been the case, higher rates are often seen as negative on the gold since they make fixed income products like bonds more attractive. In addition, investors purchase gold during volatile market periods and utilize it as a hedge against inflation, which may increase as interest rates decrease. When interest rates are lowered, demand for commodities like oil and other goods that are typically valued in dollars rises and an economy is stimulated. Fed actions are considered more significantly for many developing markets than for larger economies since they are more susceptible to these issues. The Fed's actions have an impact on the equity markets outside of the United States as well. The conjuncture surrounding the timing and magnitude of the US central bank's rate reduction has been a major cause of the recent volatility in the global stock market. I feel that interest rate cuts reduce the cost of borrowing in US dollars, thereby creating easier liquidity conditions for companies around the world. The yield on US assets like treasuries should decrease with lower US interest rates, making other markets relatively more appealing, So it's a good time for the Indian markets too, because with the reduction in the interest rates on the US side going to take place, some of the investors may change their portfolio combinations to the emerging markets. That's where India is going to gain a lot from the US Fed rate cut action. Yes, which cut was the deepest first? That's the speculation worldwide. Okay. As we all know and we discussed earlier, it's going to happen today at about 2:30 p.m. Eastern Time Zone. And as expected by the markets, it remains unclear how quickly and how far it will cut at the three meetings left this year and until 2025. This involves determining if the Fed rate will drop from its current range of 525 to 550 basis points by 25 basis points or 50 basis points following the initial cut. The market price for the larger jumbo cut has increased dramatically over the past week from less than 50% to about 70%. Fed should reduce after nearly accomplishing a perfect soft landing by 50 basis points. However, it is unusual for the Fed to leave the market guessing so much ahead of the meeting, especially this choice to the US president election, according to statements made at the same time. The committee itself appears to be divided from what I can tell. The verdict may also be delayed or the verdict may also be split. So, fingers are crossed. In summary, the necessity for a cut signals towards growth difficulties, but we will have to wait and see how things pan out when the economy is viewed independently of elections. Hope the information is useful. Thank you very much for your patient hearing.